outsized returns by understanding two simple things: macroeconomics and market cycles. So I've seen this happen just time and time again, where price in the stock market becomes overextended and we end up having some sort of fundamentals that produce a so-called market crash. In this case, stock market overextended. We had Trump's inauguration, we had the tariffs that were implemented, we had various different reasons as to why there was a sell-off in the stock market due to increased costs for companies and the tariff or taxes on imports that were implemented. We had global trade tensions, we had investor uncertainty, and we had a disruption in supply chains, which then equated to a strong sell-off in the stock market, a strong liquidation of capital outside of not just individual stocks, but basket companies like the S&P 500 and the NASDAQ. And it's just happened time and time again where we've seen an overextension in the stock market. We have so-called coincidence of a major fundamental factor, a major macroeconomic factor in play that then liquidates tons of cash outside the stock market, and we see a major sell-off. So I've just gone to the S&P 500 on the weekly. We can see how throughout certain times we had, Feb 2020 where price sold off, good 22%. We had pre that also 20%. We had the COVID 22%. Then we had the inauguration and the tariffs implementation, good 20%. So just by understanding cycles, understanding fear, greed, uncertainty in the market that produces opportunity, and just basic macro, that what we've seen wasn't necessarily the world coming to an end. It is a simple thing of rebalancing when it comes to stocks. And in order for stocks to trade higher, we need more liquidity, and to see a strong exit of liquidity, a strong push down into key areas, which is also another important factor. And then having a strategy to take advantage of these moments. So when we position, to not panic, but when we're not positioned, to know how to deploy and capitalize on a market downturn. So in this case, S&P 500 was probably one of the biggest holdings that we had. I was the most confident on it. Not only did we sell off a good 22%, but it is the exact same setup that we look for even on the day trading and leveraged side of things, where we have clear structure, price trading into previous highs. We had the break, we had pull back into value. So we had this value area around here, 48.42, which had basically tapped to absolute perfection. We had the 50 EMA coming through. We had 61.8 on the fib. It is a beautiful golden pocket for us to slowly start dollar cost averaging. So while everybody was panicking, selling their holdings, we were investing from 4,800 around about, and we started just dollar cost averaging and sizing in pretty aggressively. As for myself, still holding, looking for that extension straight into 66.16, and that would be a nice juicy plus 20, 30, 36% on my position, right? So that is the first holding. Beautiful trade, comes around not very often, but when it does come around, it's a good opportunity to start deploying. So seeing these opportunities do happen fairly often. For the S&P 500 in specific, not that often. But what we did is that we had a couple of holdings. So I'm just going to open up the Discord channel here. I'm going to show you basically what we're looking at. So this was 1st of April. We obviously had Tesla. That was the first one on the watch list. As you can see here, we had that strong spike. Tesla's a good company, good founder, good fundamentals, but it is deeply priced at discount for simple emotional and macro circumstances, and not because it's a bad company. Likewise with the S&P 500, this is the top 500 companies in the US. So for this to go to zero is almost impossible. To see the recovery was inevitable. Microsoft, also a good company, clear setup, right? So we had the breaks, we had price pulling back into value, we had a good sell-off. So getting positioned on this at discounts. We had Google, which was also a good position. And then we had MicroStrategy, which was a position we added on later into the month. MicroStrategy was also a catalyst, not just for good technical positioning and discount, but for the main fact of them acquiring a lot of Bitcoin, and probably one of the most held Bitcoin by any institution. So obviously it is one of our positions, not just for a macro tariff catalyst, but also for the Bitcoin run catalyst that we wanted to be positioned. So let's just have a look at some of the holdings and give an update of where we're at the moment. S&P 500 up over 20%. Let's go Tesla. Tesla, as you can see from that pre-market, the forecast that we had, straight into value at basically 5,000 is where we started pricing in and getting positioned. And as you can see, we had a pretty significant rejection of our key level, still holding this position. We're now trading above our EMA. Looks like we come back to retest it and holding. So I'd like to see this extend a bit further, but up a good 50% on that holdings. I mean, that's massive, guys. I mean, if you could have understood simply macroeconomics, understand market cycles, and piece the two together, I mean, this would have been a great opportunity to start deploying and generating outsized returns by understanding your own self with minimal fees and asymmetric risk. So that is Tesla. And you've obviously got MicroStrategy, Google, some of our holdings. Let's have a look here. Google also up pretty nicely. We're trading into discount, expecting a nice further expansion from there. And then Microsoft, probably one of the better holdings, which is doing absolutely great. So guys, I'm going to keep this video short. If you understand market cycles, you understand a little bit of macro, and you're following what's going on, you understand your technical analysis, these setups produce themselves, not just on the smaller time frames, but on the higher time frames too. You manage to allocate quite aggressively based on the last couple of weeks and the market's recovering. And these are outsized returns that you're not going to find at any advisory, any investment banking institution, but by simple investing in yourself and deploying capital where you're finding opportunities. So that's exactly how we do it at Legacy. And we'll continue to rebalance. We'll continue to structure spot opportunities and generate alpha. So I'll see you guys in the next video.